For crying out loud, I just got another text of a should I buy Shiba Inu. This is ridiculous. I thought with this huge downtrend, we were going to wash out all those paper hands. And we still have all these meme coins out there. People still trying to get a quick buck. I guess that's part of the market. As you guys know, we just had a huge shakeout. And I'm getting all these questions all the time of what do I buy? What do I sell? How low, how high, what? Only way you can make these decisions is with a fundamental analysis of what you own so that you're not emotional about it, that you have conviction. So we'll go over that today with Bitcoin, and then you can decide through my help perhaps whether you should buy, sell, or hodl, right? So let's talk Bitcoin. It is the alpha and the omega of money. It is money 2.0. It is digital gold. It is solving the digitization of the dollar, of any currency out there, of gold on larger scales than those are themselves potentially, right? So it solved the double spend problem. And if you want to think about the double spend in the fact of I'm going to have a picture on my phone that I'm going to send via text to you. Now I own that original, and then you also own that copy that I just sent to you. So that's obviously a problem for money when you don't want the sending of it to actually result in two different substantiations of that. So Bitcoin did that with an intricate system of mining and verification, validation, and a bunch of other things beyond the scope of this talk right here. But what it also did is it disintermediates the transfer of value. And everything that we do nowadays that's worth a decent amount of value, there is an endless amount of middlemen in between the two transacting parties. And everywhere along the way, they're either one, able to tell you, no, you can't do that, or two, they're gonna extract some value from that transaction. If you're selling a house, odds are that you're gonna spend about 10% of that transaction paying middlemen that literally do not contribute much to that transaction other than some semblance of trust. So Bitcoin is providing a trustless way to exchange value, and that's extremely important. The other thing that it's doing is it's turning the fiat currency system on its head. And I guarantee that before you heard about Bitcoin, you didn't know what the heck fiat currencies were. Well, here's what fiat currencies are. They're a currency, they're a money that the government says has value, and it's nothing else beyond that, right? After World War I, a little ways, we came off the gold standard for all intents and purposes. After the World War II Bretton Woods Agreement, we agreed that the US would hold our US dollars backed by gold in our repositories. And then the other world currencies were all going to be based off of that. In 1971, you guys have seen the video probably, Nixon took us off of that. We were not able to reimburse those card holders with the gold that corresponded to their dollar figures. Every single fiat currency that has ever existed either has failed already or will fail. Fiat currencies, by definition, cannot last because they are based simply on a decree, and the power of the individuals in the large organizations and governments that are running them obviously pervert the original vision, and other force majeures happen that drive us off to that. So the most successful fiat currency, the pound sterling, lived for 317 years. But the reason I use quotes for the most successful is because that it's also lost 99.5% of its value in those years. So it's kind of hard to say that it actually has value. What does have value is gold, right? Gold has existed for over 5,000 years. And the reason it has value, and the reason that things historically throughout time have value, all the way from rye stones to salt to gold, etc., generally result in it being a scarce resource, and then it collectively is agreed upon by the community that it actually has value. It's kind of a little bit Inception-ish, if you want to think about it, that things have value because people assign value to them. But that's exactly what it is. Some people may say that it's because of the intrinsic properties of it. Wrong. The most successful monies and currencies throughout the history of the earth and humanity have been just that, scarce resources that people collectively assign value to. So what we are trying to do here with Bitcoin is we're going to try to adhere to those sound money principles in a decentralized fashion, right? Satoshi Nakamoto, 2008, wrote in his white paper that it is a peer-to-peer electronic cash system. So we are able to act peer-to-peer. Me, Alice, send you, Bob, one Bitcoin, and then nobody can either censor that or tell me that that transaction is invalid if it adheres to the actual code of Bitcoin. So it has transferred the traditional trust and money systems from the bank or the central banker, or all those that are able to censor and pervert the systems, to the actual code itself and the community essentially underlying that code, and that it will propagate into the future. With that disintermediation and decentralization, that trust is then transferred to that code instead of those individuals and middlemen. How that is done is through a network of nodes. Every person that has a node, it's basically a computer that has the history of that blockchain on it and the code that it's running to be able to verify and validate that those transactions it's receiving are valid transactions and that they should be on that blockchain. A miner is that node operator, but is also somebody that's invested in a significant amount of hardware that's able to solve complex hashing algorithms. Basically, you have something coming in one side, it's going to reduce it to, in this case, SHA-256, a signature that information has a unique fingerprint. So it's not essentially useful work in the fact that it's not solving complex math problems, which is what most people say, but it is proving that they have that hardware and that they're able to therefore write that transaction block onto the blockchain, and they're not just some random thief trying to write invalid blocks or to double spend Bitcoin and do other nefarious things on that network. Another key concept is addresses and private keys. You guys have probably heard that in the news recently with ransomware, that some illicit actors were requesting Bitcoin for the ransom for their attacks. That ransomware is supposed to be paid to an address in the interwebs. That address also corresponds to the attacker's, in this case, private keys. The FBI got a hold of that attacker's private keys on a server, and then therefore they were able to access the address. Just how you would think about if you got the keys to somebody's house and you knew where their address was, you could go into their house and take things on their property. It would still be stealing technically, but you have the ability to do that then. With this system that is disintermediated and is decentralized, transactions are fast and they are cheap. The underlying level of Bitcoin writes to the block approximately every single 10 minutes, like clockwork, and those miners are doing that repetitively, repeatedly, and 24/7, 365. They don't take off Christmas or Eid or Easter or anything like that. They're going. They're right into that blockchain because they have an incentive to do so. Last year, there was a transaction for about $1 billion by an exchange for a fee of 69 cents. That is remarkably cheap. If you can think about how much is spent on remittance right now throughout the world, El Salvador just came out that they were going to support Bitcoin as legal tender of their nation. Their GDP is over 30% due to remittances. In some remittances, Western Union and other companies you've heard of sometimes can charge as much as 40% of the transaction, which is astronomical. Those middlemen are extracting so much value and not really contributing much to it, especially with other technologies like Bitcoin that we have. So this is extremely powerful, and you'll hear a lot of time of banking the unbanked or unbanking the banked. We're basically getting a bank on your phone, in your computer, and anybody throughout the world about 40% of those throughout the world right now that don't have a bank are going to be able to be banked because they have cell phones. Even the real dumb cell phones a lot of times are able to have the ability to transact Bitcoin. Bitcoin has all of the fundamental properties of a, quote, sound money. And sound money is something that can't be easily debased and devalued. The Federal Reserve of the United States and many other countries throughout the world today are trying to actively debase their currencies by printing a massive amounts of money and lowering the federal fund rate in others to either zero or negative interest rates in some areas. This is obviously not sustainable. And in the US, we're piling more debt on top of more debt. Just this year alone, the past 12 months, approximately 30% of US dollars to ever exist were printed, and that's mind-blowing. So this sound money of Bitcoin is scarce. There's only 21 million ever to exist. You can't print more. You can't have some sort of inflation bug without the preponderance of the community knowing about it and doing something about it. It's portable. I can memorize, if I chose to, a 12 or 24 word seed phrase, which would be corresponding to my private keys, and then I could take that across a border. I could take it to the moon if I was on a rocket. That is extremely portable. It's more portable than gold. It's even more portable than fiat. Try taking $1 million across the Atlantic in the US dollar and see how much TSA likes that. It is divisible. It is more divisible than the US dollar. It is the most divisible that we've seen in any kind of currency, save like maybe if grains of sand were a currency in some nation. But it is extremely divisible. And then finally, it is fungible. Fungibility is important because you don't want some of that to be worth more than others. Fungible means that they're interchangeable, essentially. So in the case of currency, $1 US is the same of $1 US. $5 US is the same as a $5 bill of the USD. The same is said with Bitcoin. One Bitcoin is the same as one Bitcoin. The fact that you have one specific Bitcoin that belonged to Jeremy before doesn't have any sort of additional value over one that belonged to Ben before. Those principles make Bitcoin a harder money in a lot of ways than gold. So people call it gold 2.0. I would argue that it's going to be much harder and higher flying than gold is. And then let's finish out with the network effect. There's two things I want you guys to know here. Metcalfe's Law was invented in response to the attempting to gather wealth on top of the telephony system when it was first invented. Metcalfe's Law states that the network's value is growing exponentially in the relation to the amount of nodes on that network. So if you want to think about it, there's only two nodes, Alice and Bob on that network, and then Charlie just gets a phone. Not only is there one more network node, connection, an edge that's created, it's growing at an exponential rate by each individual person or entity that gets added to that network. Bitcoin is growing every single day, and it's growing while you sleep. And then lastly, the Lindy effect. The Lindy effect states that something is likely to be alive for the same amount of time that it already has been alive. So Bitcoin's been alive for over 10 years at this point. It's likely to be around for another 10 years or longer. That's often missed by the media. You read every single month that there's some news outlet, usually it's Forbes because they have their contributors, that are writing that Bitcoin is dead, or Bitcoin's used for illicit activities, we need to ban it. Bitcoin, less than 1% of Bitcoin is used for anything even tangentially tied to illicit activities. So that is just incorrect. There's usually an agenda behind those, a lot of people think. So Bitcoin, a lot of models out there, was believed to hit 100 to 200,000 this year. I'm more inclined to believe that that could be delayed with the recent drop that we had, based on all the FUD and circumstances surrounding that. But it still holds true in Plan B's model, in the normal 4-year cycle model, in the lengthening cycle. All of the models are pointing that Bitcoin being substantially more valued this current cycle than we are right now. So when we did take a dip, I bought more at 31,000, 32,000, and I even bought some GBTC for my retirement account because that's able to be in there. So hopefully that helps you guys decide what to do. The point is, don't buy Shiba Inu because it's a hot potato. Don't buy something because some random dude that doesn't know anything about crypto on the internet, on your Facebook page told you about. Buy something that you're convicted in, that you actually understand, so that you won't get emotional and you won't sell at the bottom, so that you'll have diamond hands and you'll hold till when you actually should fundamentally or even technically exit that position. My point is, know what you hold. Smash the likes, hit the subscribe if you're still here. Plan on doing a couple more of these videos on the key cryptocurrencies, so hopefully you guys like it. This is Jerry. See you.